let's break it down. Do you think inflation peak has been made, or is that peak is being made, or one still can't say with certainty, and things may remain elevated for next couple of months?
So let's break down inflation into three parts. One is the interest rate effect, one is the the grains effect, and other is the metals effect. Oil is of course there. Oil and commodities I'm putting together. So if you look at the interest rate effect on inflation, that is still to play out, because I think there'll be another hike of 25 to 50 bips next month in June. So that will play out over the next 2 quarters. If you look at the grains effect, that's largely related to the fact that we had a heat wave locally in North India, and the Ukraine Russian war. So that will take some time to resolve. Once the Kharif crop comes in, I think that will make it abated in India at least, while the Russian one is still uncertain. As far as metals is concerned, because of global growth slowing down, and specifically China slowing down, I think the metals part has started abating over the last quarter or so. But there are two issues there. One is there has been a capex, very little capex over the last 15 years in metals. So on the long term, metals still look quite buoyant. And the second thing is that you never know how the Chinese are going to play out, given that they have the re-election in November. How they're going to ease the economy, given that it's pretty tough right now. So that is on the metals front. On oil is of course a big question mark. It depends on Russia and Ukraine, what happens there.
Nandan, what are your thoughts on valuations in this light? Are valuations which have got corrected on benchmarks and even small cap, mid cap, are valuations factoring in this data point and these worries fully? Or do you think that there is scope for valuation compression and adjustment given the realities out there?
So two things. One is that, in terms of the analyst forecast, what has happened over the last quarterly results that we've seen is basically that the inflation has affected only the margin so far. And many of the sectors have not been able to pass on the costs. Though auto, very strangely, auto has been able to pass on the costs in the last quarterly results. But it has not affected demand yet. So it will take time for the effect of inflation and interest rates on demand to get affected. Only then will the analysts lower their forecast earnings, which will happen over the next 2 quarters. So that's one part of valuations. The second part of valuations is that today, the Nifty forward multiple is at the 5-year average. And, given that our Nifty ROE is 16%, versus the 5-year and 10-year average being between 13 and 14%, I think that's a reasonable place to be at. However, it is still far above the 10-year multiple. So if you take the 10-year average PE of the Nifty and you put the forward EPS of the current Nifty EPS, you get a Nifty base of around about 15,000. So that's like, very back of the envelope calculation. So I will say that you're not too far away from the bottom, and nor are the prospects, the upside, well known till the analysts forecast their earnings. So we're midway.
Interesting. Sure. So when I look at your portfolio selection strategy, I see that you have used the cricket terminology.
Football.
Yes. And you have a lot of auto names in your active strikers. Yes, you follow that game very closely. So auto names among your active strikers. Talk to us about why you like these names such as Ashok Leyland, TVS and Maruti, which have done pretty well. Do you think beneficiary of commodity prices coming down or other factors?
So let me just step back a little bit. Just talk about the broad theme of the strategy report. One is the fact that most important thing to remember is that your nominal GDP growth of India is, if you take the real GDP growth rate of India 7% and inflation is another 9%, you get 16% GDP growth rate of India on nominal terms. That's among the highest or the highest growth rate among all major economies. So they will be. So what is happening is, because of the global economic slowdown, you have two effects. One is your exports get depressed, and that is a far higher proportion of the stock markets than it is of the real economy. And the second is that your equity inflows will get staunched. Obviously, if there's a global economic slowdown, your EMs don't do as well, emerging markets, and a lot of our monies come from the emerging markets flows. To counter that, of course, is the fact that your SIPs, which are very sticky, they are 75% of the mutual fund April inflows. So with that background, what I'm saying is you got to, when I'm also saying that in terms of valuations, you're neither, at the bottom, nor can the, upside be forecast. You're somewhere, in the middle. So with this, you have to have a portfolio which is either you time the bottom, which is very difficult to do, or you have SIPs. Or the third option, which is for institutional investors, is basically have a range of aggressives and defensives, which is what the football team is about. Now, coming to auto, see what happens is some of these headwinds that I've talked about in terms of the global economic slowdown will get partly offset by the fact that commodity prices will abate. And the two sectors which have got affected the most due to commodity prices in terms of demand as well as margins are auto and cement. So while cement, the outlook, short-term outlook is not too good, we have basically focused on auto, which will benefit as your commodity prices go down over the next couple of quarters, as they've already started going down. So coming to these three subsegments, Ashok Leyland, your commercial vehicles, the fleet profitability is now very high, and the fleet profitability is more than their costs. The freight rates have gone up more. Number two, your replacement cycle is doing well. Number three is that your age of the fleet of commercial vehicles is at a decadal high. So these are the three drivers for the commercial vehicles part. Coming to TVS Motors, which is a two-wheelers. See, two-wheelers have been constantly there, market share, your sales have been falling for the last few quarters, except the last quarter where it has started recovering now. And there is some signs of rural recovery also, though the jury is out on the non-agri part of rural. And third thing is the fact that, there was a problem in terms of a large number of EVs coming up in the scooters and motorcycle side. So that has abated now with, quality problems. So now I think the EV thing is consolidating to a few large six players. On Maruti, the chip problem still arises, but, your passenger cars have normally done well whenever the launches have been good. And, whenever there was a last launch cycle for Maruti, the stock price has done well. So now we have a series of launches over the next 12 months, starting with the SUV launch probably in July. So I think these are the main drivers for these three segments of the auto industry.
Mm-hmm. Let's talk about the assortment of names which you have as midfield versatile strikers. I see some retail names. In fact, one of the retail names just announced a massive deal with GIC. Talk to us the names which you have there and some of the triggers which may play out there.
So, see, we have only one retail name out here. And generally, if you see over the last few months, even throughout the COVID, the run rate of retail has been quite high. So hotels, restaurants and retail have generally had a good run rate over the last, maybe because of revenge buying or whatever. So that has continued. The name that I have is ABFRL, which is Aditya Birla Fashion and Retail. So there's a large component of it which comes from Madura. There's another component which comes from Pantaloon, which is the small, and the third component which comes from new businesses like the innerwear, etc. So I think all three are driving Aditya Birla Fashion. So that's the name I've got in the midfield among retail players.
How would you build in some amount of cushion, some amount of defensive plays in the portfolio? Because things are very volatile right now.
So I've got three stocks there among the defenders, including the goalkeeper. I've got NTPC, where it will the renewables capex up to 60 gigawatts will be the same as its current your coal-based capex. So there you have growth there, and you have the renewables, which may be either there will be a strategic buyer or an IPO, which they've already said that, over the next 12 months, that's what is expected, so it to be hyped off. And if you look at that part of the business, which is huge growth forward, so you'll see you're getting the result, the residual business at hardly 5, P/E. So that's NTPC. Sun Pharma is basically, unlike the other players, is into specialty, pharma, not so much into generics. So where you're going to see acquisitions of a large number of many brands. And we have among the defensives, we also have Apollo Hospitals, which is a pan-India presence, and it is there across, the line of pharmacies, diagnostics, etc. So it's the all in all of the entire healthcare system. So these are the defensives.
Right. All right, and then we'll let you go on that one. Thanks so much for your time today and sharing your strategy, your views on the market, and of course, the portfolio which you are recommending right now. Time for a short break. On the other side, Dr. Soumyakanti Ghosh, one of the prominent macro voices, would be joining in with the chat on market and macros. Don't go anywhere.
Co-powered